But let me now bring on board Arnav Das, Managing Director Research with Roubini Global Economics. Arnav, morning. Thank you for joining us. Arnav, has the Indian economy bottomed out? Or do you think that in the second half of this year, we really could be staring at some powerful growth when it comes to India?
I think it's reasonable to expect that there'll be some bottoming out and some acceleration in India as well as the other major emerging markets, the BRICS and whatnot. I would just caution, however, that we shouldn't expect growth rates in the BRICS in particular to return to the very high rates of growth that took place immediately after the global financial crisis. There was a big inflation pressure that took place as a result of those very heady rates of growth, and to avoid macroeconomic imbalance, we reckon that many policymakers will not be pumping growth up across emerging markets as fast as they had before. Right? Global growth is going to be somewhat lower than it was before the crisis, certainly, and even in the immediate aftermath of the crisis.
Arnab, hi, morning. So does commodity price correction put India in a sweet spot, or is it too early to say that?
It certainly helps. I wouldn't go so far as to say that it puts India in a sweet spot. India has a number of problems of its own making, or at least not of its own solving, which no amount of correction in commodity prices is really going to help. Right? What the fall in commodity prices will do is reduce the oil import bill, the commodity import bill in general, and it will help with external imbalance and the financing of the current account deficit. But the severe structural challenges, the supply side bottlenecks, the labor market rigidities, the political challenges, the signaling issues, the coordination issues, all of these problems will remain and will need to be addressed as best possible by this government before the election and hopefully by the next government.
Arnab, inflation has been trending down despite RBI's hawkish commentary, markets hoping for further rate cut. Do you think there is enough elbow room for Reserve Bank of India now to go ahead with monetary easing?
We think there will be further cuts. We think they won't be very aggressive or intensive, but they'll be gradual. The reason that inflation is coming down is because commodity prices are down, as you say, and also because the economy has slowed down quite sharply, quite significantly, as it has throughout the BRICS and even in China and many other large emerging market countries. Now, slower growth, lower inflation, lower commodity prices, and lower inflation, that's good so far as it goes. But if there's a significant acceleration in the growth rate that might take place because of an aggressive easing, there'll also be a reacceleration in the inflation rate because of the supply-side bottlenecks and other issues that I mentioned before. So on that basis, it doesn't make sense for the RBI to really go for it with very aggressive rate cuts.
Right, but Arnab, can rate easing along with government push to clear stalled big infra projects help in reviving capex cycle in India?
It certainly can. Whether it will or not, or how much it will, is another question. It clearly is a situation in which there needs to be a much greater push in infrastructure investment by the public sector and the private sector separately, jointly, however it's sliced and diced. Is really a question of political economy and public policy choices. But that really needs to be done to restore the potential growth rate of India and to make this famous demographic dividend really pay off.
Arnab, in your last interaction with us, you were bullish on India's consumption story. So if capex or if the local capex cycle picks up further and its consumption is strong, then what kind of GDP growth do you think we could be staring at for this calendar year, which is 2013?
I think, in the medium term, maybe not as early as 2013, we might get back up into the kind of mid to high single digits rather than being in the mid or even low to mid single digits, which is where we appear to be right now and where we're likely to be for 2013. I am bullish. We are bullish on consumption as a whole in India and many other emerging market countries. Incomes will continue to rise. The growth differential with the West will continue to be reasonably strong. However, I would sort of counterbalance this, bullishness, if you want to call it, on consumption with concern about again, the external balance, the fiscal balance, and the general issue of imbalances in the Indian economy as in many other major emerging market economies. A lot of work needs to be done to raise the potential growth rate and to take advantage, again, of this demographic dividend, to invest in infrastructure, as we discussed, to invest in people, and to raise the productive capacity of the very large number of people that are coming into the Indian economy and the workforce.
Right. So in that case, what level do you expect the rupee to settle in at?
We are still thinking that the rupee will depreciate a bit. This is as much in the world of currencies that are more or less free to float, as much a story of, let's say, relative dollar strength as weakness in other countries and other currencies. Right. The big moves in major currencies have been in dollar yen, euro yen, and to some extent in sterling. Really, what's happening in the world is that U.S. monetary policy is going to be the first one that comes out of the cycle and starts to tighten, while in much of the rest of the world, developed and emerging alike, the discourse on monetary policy, as we've just been having here, is about easing.
But Arnab, investor community is quite bullish on India. Benchmark indices are almost marching towards new high. Do you think the kind of global confidence which investors have in India, that is justified?
I think there's reason to have a decent amount of confidence, but not to be very confident, certainly not to be overconfident. Like I said before, I don't think the Indian political establishment is in a position yet to agree on all of the basic principles and all of the basic fundamental changes that need to be made to make India a much more attractive place to invest and a much more in order to have a much more profound growth process and a much higher growth rate without much higher inflation. So therefore, I think people will continue to come into India because there is a growth story there is a consumption story there is a pickup in per capita income. All those good things are happening. It's just that that's going to be associated maybe ultimately with trend growth of 5-6% rather than 7-8 or even 9% compared to the heady days when the Indian growth rate was converging on the Chinese growth rate. It turns out not even China can grow at Chinese growth rates. No reason to think India can grow at Chinese growth rates. It doesn't mean we're going back to the so-called Hindu growth rate of the past of just a few percentage points. We're going to grow several percentage points, but there's a big difference between growing 5 or 6 and between growing 7 to 9 that is going to show up in the flows of capital and in the valuations of assets.
So, Arnab, can there be a threat to Indian recovery as politics takes over in the run-up to the elections?
Yeah, I suppose, political outcomes are going to be very important in India as in other emerging markets and in developed countries as well, right? Politics is more clearly a determinant force in economic performance and in financial markets than it ever has been in the past. That's generally been true of EM. It's been less true of developed markets. It's now increasingly true everywhere. And of course, people have seen this political tension in India several times now in the last few years, whether it's on, reform and opening up of the retail sector and the backtracking on that, and then the forward tracking, the various kind of about faces that have had to be made for various kinds of political constraints on that front. All kinds of emotive and serious issues, intellectual property, big pharma versus generics, all these kinds of things. They're going to continue to affect the outlook and the relationship in both trade and investment between India and her partners in the rest of the world, and affect the business operating and financial investment environment in India for years to come. So I think the election is very important. I wouldn't get my hopes up too much. I wouldn't be despondent either. I would take a balanced view and think that things are going to be, like I say, okay but not great. Not a disaster either. Muddling through seems to be the name of the game.